All right, traders, it is the 30th of September 2017. My name is Jameson. Welcome to Behringer Trading. We're going to take a quick look at Eigi. This is a ticker that I found just at the market close doing a FinFiz screen here. So I like this chart a lot. So this is a daily candlestick chart. We can appreciate that there actually is a little hidden inverse head and shoulders that's there. We recently closed up 4.5% here on Friday to re-achieve the 200-day simple moving average. The 50 is declining. The 20-day is actually getting ready to give us a crossover, and it's starting to rise. We can see below that the RSI is actually starting to rise. It's in bullish technical position. So we have, to keep things simple here in a lower time frame, we can appreciate that we have some consolidation. We have a shakeout, so that the shakeout tells us that we're in the later phases of the accumulation that's here. We have a breakout above, so there's our sign of strength, the back tests. There's a back up to the creek, and then a breakout higher. So that should transition us from phase D to phase E, the actual markup within this accumulation range. So although I may like a lower entry here, from a Wyckoff train perspective here, it looks like it's actually ready to start its markup and trade into this $9, if not $9.40 range. So I'll be looking potentially for an entry here Monday, Tuesday, Wednesday. If we look at a weekly chart, another reason I think that's important, I'm not going to look at this entire consolidation, but you obviously can see that we have a stopping action. We have this basing pattern for almost 2 years now. So here's our spring. This spring, just like I said here for the daily, suggests that we're in the later stages of the accumulation schematic. We encounter some supply here, but despite this big bearish effort, evidence here by the volume, it did not actually break support. We had the spring, and it looks like we're just in a process of reconfirming this spring, this resistance here as a level of support. So big bearish session, narrow spread, narrow spread, narrow spread. There's compression through here. We break away from there, and then we reject it. We have some inside sessions, more compression, and we're just now getting out of there. So this all looks like reaccumulation, and we should retest this 9,950. But I think if we look at it in relationship to the larger accumulation schematic, it's about time that we get a sign of strength. So if we get a proper entry here, our downside is last week's low. So we're looking at about a 4.5–5% risk to the downside. But our upside here, if it's a sign of strength, will put us above $10. So there's a potential trade here to trade about 20% or more into $10.5, $11, and then pull back moving forward, and then that'll put us into a sign of strength, mark up inside the range, back test that, and then potentially mark up outside the range and continue its rally higher. At that time, I'll measure a longer term price objective for the weekly time frame. In the meantime, though, I think this is a good trade. Here on the daily time frame, we're in phase D. This is up higher. We're in phase E, and this is transitioning from accumulation to a markup. And if we time it properly, this markup, if we're using multi time frame analysis, the markup on the daily would give us a sign of strength on the weekly, which then would back test again. So the timing here, I think, is almost perfect. It'll be an interesting case study and trade moving forward. Good luck next week.